Berkshire loses $43.8 billion in second quarter. Buffett insists on bottom hunting. Well-known Warren Buffett's Berkshire Hathaway Inc., has been following an old adage, buy the dip. The financial report for the second quarter of this year announced on August 6 shows that Berkshire Hathaway spent $3.8 billion on net stock purchases in the quarter. In the second quarter of last year, Berkshire Hathaway is still a net sell. Although the second quarter of this year, S&P 500 slumped 16% as Berkshire Hathaway's dip hunting losses, but because of the growth in insurance and rail business, Berkshire Hathaway reports operating profit of $9.20 billion. CFRA research analyst Kathy Seifert believes that Geico, Berkshire Hathaway's personal auto insurance division, is a potential risk. Although Berkshire Hathaway's other insurance businesses grow in tandem with Geico's investment income, but Geico reported an underwriting loss of $487 million, Seifert said. Berkshire Hathaway's second quarter results overall reflect decent revenue growth. Demand for various goods and services remains good, however, this was offset by rising investment costs and stock market volatility, Berkshire Hathaway says. Geico's losses due to rising used car prices and shortage of auto parts, consequences leading to increased claims. Berkshire Hathaway says even if premiums increase, effective policies will also decline. This may indicate as customers look to other peers for better prices. Geico is losing market share, Seifert says. Geico is a bit difficult right now. While the same scenario is playing out at other auto insurers, but Geico appears to have been hit particularly hard. Still need to wait and see. Weak U.S. stock market is also weighing on Berkshire Hathaway's results, at least on paper. The second quarter, Berkshire Hathaway posts net loss of $43.80 billion. That's because its portfolio lost $53 billion, but Berkshire Hathaway sees these results as a function of accounting standards, alleging they provide misleading representations of the company's actual performance. Matthew Palazzolo, senior insurance analyst at BI, Berkshire Hathaway spent $3.8 billion net buying stock in Q2. Net purchases totaled $45.2 billion in H1 2022. And net sales of $16 billion in 2020-21. We believe that this may continue, but that doesn't necessarily mean Buffett is bearish on his own stock. Historically, buybacks have always been a lower priority for capital use. Buybacks of $1 billion in Q2 were down sharply from roughly $7 billion per quarter in 2021. Buffett adds to other stocks, while hefty interest in own company stock has declined the second quarter of this year. Berkshire Hathaway share buyback is only $1 billion, down from $3.2 billion in the first quarter. Insurance investment income in the second quarter was $19.1 billion. The financial report also shows this June, Berkshire Hathaway Energy, from Vice Chairman Greg Abel in June, acquired $8.7 billion worth of common stock. The deal was not previously disclosed. Investing so much is a big deal for Berkshire Hathaway's huge cash hoard. Just a drop in the bucket. As of the end of June, Berkshire Hathaway has $105.4 billion in cash reserves, not far off the $106 billion at the end of the first quarter. Since this year, Berkshire Hathaway adds to Occidental oil companies again and again. Aggressive behavior in Occidental Petroleum Corp. stock. One cannot help but wonder if the company is willing to buy the energy giant, but in filings with regulators this quarter, Berkshire Hathaway doesn't reveal its strategy.